It's been a tough year, Delano. You can't blame a guy for trying to find a couple of positive stats, can you?
And good morning, Brian. And no, we can't blame you for trying to find a couple positive stats. Although, if you're looking at the third quarter, I think there's still, obviously, as we know, headwinds still ahead of us. But I think you're right. If we're looking for kind of the rows in this whole sort of thing, if you look at like EPS projections, that's something that's been holding up pretty well. We're seeing rising 8.8% this year and 9.3% in 2023. So we're still holding up on EPS projections for S&P 500 companies. But if those forecasts come down, then we kind of, may see another leg down.
Well, listen, I don't know everything. I don't know that much, to be honest with you, Delano, but I do know this. Stock markets go up over the long term. They do have these painful periods where they drop, whether it's for a year, could be, by the way, a lost decade, like it was in the 1970s. But at some point, stocks do stop going down. Otherwise, nobody would ever invest in the equity market. Is there anything that you're seeing that gives you maybe a little optimism for the next 6 months, 6 years?
Yes, and you mentioned a little bit about that as far as, one thing I'm looking at, if we get a shallow than expected recession, everyone is bracing for what's, obviously is rough times ahead. And if we see a shallow than expected contraction, I know we had the 1.6% contraction GDP in Q1. If we come in a little bit shallower for Q2, and then you maybe see the Fed switch to a different tone, if we see inflation in certain areas, a core, maybe peak, and the projections are rate rising, kind of get a little bit more hawkish, then we could see, the market trying to kind of get a little bit better and less volatile in Q4, maybe first quarter of 2023. But, I think those are areas that investors should be looking at. I think younger investors should be looking at their portfolio and see if there needs to be a rebalancing. Obviously, your defensive, your staples, your energies performed well over the last year. And now there might be some valuations that are pretty attractive for your growth part of your portfolio that's been hit pretty hard over the last year or so. So investors that are younger, as you mentioned, that time frame, this is an opportunity to look at those companies like maybe Meta or Apple that are cash flowing really, really well and strong balance sheets that are having a tough environment in this rate rising environment.